Time for hot picks in technology. Our guest has Microsoft as his top selection. He says the company is a clear AI winner. Let's get more from Jed Ellerbroek, portfolio manager at Argent Capital Management. Jed, thanks very much for joining us. Tell us, what is the bull case for Microsoft when it comes to AI?
Hey, Andrew. The bull case for Microsoft when it comes to AI is that Microsoft Azure is the fastest growing cloud computing business in the world. Their big customer, OpenAI, is seeing rapidly rising usage and workloads. Azure benefits from that. Microsoft is also able to hold in their operating margins despite that really strong growth, which is something most cloud computing companies have been unable to do. Oracle is struggling with margins going down a little bit in exchange for that big revenue growth. Microsoft doesn't have to do that trade-off, so that's great. And then finally, Microsoft's software business is also performing well and growing consistently. So I think Microsoft is really firing on all cylinders today. Revenue growth accelerating, margins holding in, continued strong investment in data centers that are generating a clear ROI.
You say that Microsoft is aggressively building out data centers to handle its enormous computing needs, but they're doing it in a prudent way?
They are. Yeah, they are. All these companies, all the cloud computing giants, Microsoft, Amazon, and Google, they all have more demand today than they can satisfy. And more supply comes from opening up these big new AI data centers that are under construction all over the world. And so they are chasing demand, but they're doing it in a prudent, responsible way. They're making sure that they build data centers that will be fungible and usable for a variety of different workloads and tasks. And they're not just building anywhere and everywhere they can get permitting.
Let's get on to your next player, and it wouldn't immediately leap to mind as a tech stock, but it's Apollo Global Management, private equity giant, and they are becoming a major player in data centers.
They are, yeah. Apollo has expanded recently into the financing of data centers. I think that Apollo is a compelling stock because the valuation has come down as the stock underperformed in the first half of 2025, or maybe even first 3 quarters of 2025. It's since started to rebound, which has been nice. But I think the company's seeing really strong demand for their alternative investment products. And they've also got an upcoming fundraising cycle that's going to boost their growth in 2026 and 2027 as well.
Right. I mean, they've teamed up. They're teaming up with our own Brookfield, among others, Apollo Global. How much of is a big part of their asset base now focused on tech?
It's still pretty small today, but it's growing rapidly. 80% of Apollo's business is private credit lending. And the infrastructure group focused on data centers is a small chunk of that, but growing pretty rapidly. And I think that private credit, there's been a lot of fears with regards to that. A couple higher profile bankruptcies, mostly tied to the auto sector, have really soured sentiment on private credit lately. And I think that those fears are overdone and will be disproven over the next couple quarters with just consistent execution from Apollo and Brookfield and other private credit companies.
And then finally, Tyler Technologies. Just remind us what they do and what has caught your eye here.
Yeah, Tyler's a niche business that most people have not heard of. So they provide technology services to cities, municipalities, counties, and states, mostly in the United States. So that is a relatively slow changing, slow to adopt technology, unsophisticated client base. They need help managing the operations of their communities. So that might mean utility billing systems, accounting, courts and justice software systems. And Tyler provides all of these things. They're kind of the best of breed supplier to this particular niche. They have about 50% market share. They've been growing that market share over time, and they're highly profitable, so they can reinvest in adding AI functionality on top of their existing software. And I think that their client base is going to be eager to adopt those AI add-ons over the next few years.
That's interesting. And so when you say an AI add-on, what is that? Just remind us.
Yeah, sure. So it's oftentimes something simple. Instead of filling out a long form online to rent out the gazebo at the local community park, it might be a more like kind of chat interface, like a ChatGPT style interface that's easier to use, self-service, quicker for consumers to use, and results in a slightly happier community. And cities and states all around are going to be adding functionality like that to make things greater self-service so they can employ fewer people in call centers and help desk positions.
I don't know. Some of this self-service, though, I'm a little wary of, Jed. I think it's going to be frustrating. I mean, for one thing, if an organization's AI tells you something, can you rely on that? I mean, are they committing themselves?
Yeah. Data integrity is a huge issue. And I think that is slowing adoption of these tools, both for consumers and for businesses. And Tyler's trying to take it slow, be deliberate, have really high accuracy rates, so that way people can trust it.
Thank you very much. And actually, I just want to correct something there. I said I don't know if Brookfield and Apollo have yet teamed up on data centers. I was getting mixed up there with Capital Power, or one of our electric generators. But I'm sure it's not beyond the bounds of possibility that the two could team up. Jed, thank you very much indeed. Really appreciate it.
Have a great day.
Jed Ellerbroek, portfolio manager at Argent Capital Management.